Taking a look at house prices in September 2020 for the UK as a whole, and this is looking at figures released for August. Looking at the Halifax House Price Report, also the Nationwide House Price Report, we've got to remember these two major lending groups publish once monthly reports. We're seeing strong growth in house prices continuing in this post-COVID-19 lockdown bounce. That's 5.2% up year on year, about 1.5% up month on month and quarter on quarter. The big story here is transaction volumes are returning to something closer to normal. So in July, transactions over 70,000. In August, up over 80,000. That's still about 15% down on where they were last year, but up significantly on where they were through March, April, May, and even June. So it shows that activity is starting to increase in the housing market overall. There's also been an increase in mortgage approvals as well. That's over 66,000. Now that's actually fairly strong and at pretty similar to levels to where it normally would be at this time of year, showing that people are either taking out applications to buy new properties for using finance, or, as has been widely reported, there's quite a lot of remortgaging going on at the moment as investors seek to build some capital to increase their investment portfolio, as homeowners look at options for reducing their overall outgoings and maybe cash flowing themselves through the coronavirus crisis, but also as lenders have kind of re-entered the marketplace with decent deals on mortgage products and people are simply searching for a better deal. There have been some reports of an increased level of fallen through sales over the last couple of months, which is not particularly surprising given the flurry of activity we saw as soon as lockdown ceased. Maybe some people being slightly ambitious in terms of what they agreed to pay for a property before they went out and looked at finance. Although that said, still a lot of mortgage approvals and the transaction volume looking very healthy. One of the other things to take into account when we look at the market overall is the number of buyer registrations, 75%. We've got the number of seller registrations at 59%. Now that's a balance of registrations figures from the major estate agency bodies. What that does tell us is that there are more people in the market looking for properties right now than people with properties on the market for sale, although that number of properties coming to the market for sale is increasing. Now, if we put this into context of what happens when we have these flurries of activity in the marketplace, well, at the moment, that imbalance in terms of more buyer registrations looking than properties available is leading to this increase in prices. And we also have that effect of people who are maybe looking for properties pre-lockdown and had to put their search on hold in February, March of this year, coming out to the market and jumping on things very quickly. But now as we see more sellers entering the market, we'll probably see a stabilization in terms of prices overall and a flattening out of that curve. Tied in with that, we can also expect that as the government winds down some of its support measures, there is a fairly high possibility of more redundancies coming as workforces shed their workforce when there's no government support to pay for them anymore. So make no mistake, the UK economy is in for a tricky time ahead as a result of COVID-19, and that will probably slow down activity in the housing market over the next 3 to 6 months, but that will probably also create opportunity for savvy investors to maybe pick up some properties at the right price, because we've got to remember that while the economic factors, the macroeconomic factors are causing a squeeze on finances, there are still the same supply and demand fundamentals in terms of the number of homes required in the UK, the amount of rental stock required in the UK, and even through times of economic turmoil, we've got to remember that people need a roof over their heads. So being a professional landlord, now's not the time to be fearful about your portfolio. Now's the time to be providing good quality accommodation, attracting the right tenants to your portfolio who need somewhere good and clean and decent to live, and potentially even looking for opportunities over the next 3 to 6 months as the market flattens out a little bit, balances out, and those opportunities present themselves to buy properties at good value.